A dance through time, finance and technology. From the earliest days of human civilization, finance and technology have been intertwined. The bustling marketplaces of ancient times were the first stages where this relationship began to unfold. They have always evolved together, each step forward in technology bringing a corresponding leap in financial practices. As humans invented new tools and technologies, they also developed new ways to manage their resources and conduct trade. From the abacus to the first written ledgers, each innovation marked a significant milestone. This symbiotic relationship has shaped the world we live in, influencing the rise and fall of empires and the development of global trade networks. Imagine a world without money, a place where the concept of currency does not exist. How would we trade goods and services? The answer lies in the ancient practice of bartering. The earliest forms of commerce relied on barter. This system had limitations as it required a direct exchange of goods and services. It was inefficient and relied on a double coincidence of wants, meaning both parties had to have exactly what the other wanted. The invention of coins revolutionized trade. These small portable pieces of metal became a universal medium of exchange. The development of banking further transformed finance. Banks emerged as institutions that could store wealth securely and facilitate complex transactions. Banks provided a secure place to store money and facilitated lending and borrowing, which in turn spurred economic growth and development. The invention of the printing press in the 15th century enabled the mass production of paper money and financial instruments. This was a game changer. This innovation laid the foundation for modern financial systems, allowing for more complex and widespread economic activities. The 20th and 21st centuries witnessed an explosion of technological advancements. The advent of computers and digital technology brought about unprecedented changes. These advancements have fundamentally reshaped the financial landscape, making transactions faster, more efficient, and more secure. From the first computers used in banks to the rise of the Internet and mobile devices, each innovation has brought us closer to a world of seamless and interconnected finance. Today, we live in a world where financial technology, or FinTech, is at the forefront of innovation. Blockchain, cryptocurrencies, and AI-driven financial services are just a few examples of how technology continues to drive finance forward. The journey of finance and technology is far from over, and the future holds even more exciting possibilities. The barter system and the birth of coins. Before the invention of money, humans relied on the barter system. This system involved the direct exchange of goods and services. For example, a farmer might trade a goat for a blacksmith's tools. Barter worked well in small communities. However, it had its limitations. Imagine trying to trade a cow for a loaf of bread. It's a difficult proposition. This is where the limitations of barter become clear. The system relied on a double coincidence of wants. Both parties had to desire what the other possessed. The invention of coins solved this problem. Coins acted as a medium of exchange. They had an agreed-upon value. This simplified trade significantly. Suddenly, the farmer could sell his cow for coins and then use those coins to buy bread. The first coins appeared around the 7th century BC. They were made from precious metals like gold and silver. These coins were durable, divisible, and portable. They represented a significant leap forward in the evolution of finance. The introduction of coins revolutionized trade and commerce. Merchants could now easily determine the value of goods and services. Coins also allowed for the standardization of value, making transactions more predictable. This standardization facilitated trade over long distances. Traders could travel with coins, knowing they would be accepted in distant markets. This led to the growth of cities and the expansion of trade networks. Coins also carried cultural significance, often bearing symbols and inscriptions. They were used to convey messages of power and authority. Collecting coins became a way to preserve history and culture. The legacy of these ancient coins continues to influence modern currency systems. Today, money in various forms drives the global economy, but it all began with the simple coin. From barter to coins, the journey of trade and finance has been transformative. As we move towards digital currencies, it's fascinating to reflect on how far we've come. The story of money is a testament to human ingenuity and the constant quest for better ways to trade. And it all started with the humble coin. The rise of modern banking, a financial revolution. The Middle Ages saw the emergence of modern banking. Italian merchants began offering financial services. They provided loans and facilitated trade across Europe. These early banks laid the groundwork for the financial institutions we know today. The invention of the printing press in the 15th century revolutionized banking. It allowed for the mass production of paper money and financial instruments. This innovation made transactions easier and more efficient. The 19th and 20th centuries witnessed the rise of central banking. Central banks were established to regulate the money supply and ensure financial stability. This period also saw the growth of commercial banks. They offered a range of services to individuals and businesses. Innovations like the telegraph and the telephone further transformed banking. They enabled faster communication and facilitated international transactions. These developments laid the foundation for the digital revolution in finance. The dawn of digital finance. The 1960s and 70s marked the beginning of FinTech. Computers were introduced into banking. This revolutionized how financial institutions operated. Tasks that once took hours could now be completed in minutes. The invention of the ATM, automated teller machine, in 1967 was a game changer. ATMs allowed customers to access their bank accounts and withdraw cash 24/7. This innovation transformed banking convenience. Electronic stock exchanges emerged during this period. They replaced traditional trading floors. This made trading faster and more efficient. It also opened up investment opportunities to a wider range of people. Credit cards gained popularity in the 1970s. They provided consumers with a new way to make purchases. Credit cards offered convenience and increased purchasing power. They also paved the way for online payments, Internet age and financial transformation. The 1990s witnessed the rise of the Internet. This ushered in the era of FinTech 2.0. The Internet fundamentally transformed how we access and manage our finances. It also created new opportunities for financial innovation. Online banking emerged as a convenient alternative to traditional banking. Customers could now check their account balances, transfer funds, and pay bills from the comfort of their homes. This marked a significant shift in consumer behavior. The dot-com boom of the late 1990s saw the emergence of numerous online brokerage firms. These firms offered investors a low-cost and convenient way to trade stocks and other securities. This democratized access to the financial markets. The Internet also enabled the growth of e-commerce. Online retailers like Amazon and eBay revolutionized how we shop. This, in turn, fueled the development of online payment systems like PayPal. The mobile and blockchain revolution. The late 2000s saw the rise of smartphones and mobile internet. This technological advancement fundamentally changed how we interact with the world around us, making information and services accessible at our fingertips. This ushered in the era of FinTech 3.0, where financial technology began to evolve rapidly, integrating more deeply into our daily lives. Mobile devices became our primary means of accessing financial services. From checking account balances to making payments, everything could be done on the go. This led to the development of mobile banking apps, payment apps, and other financial tools that made managing money more convenient and efficient. These innovative financial tools included budgeting apps, investment platforms, and even insurance services, all accessible through our smartphones. The invention of blockchain technology in 2008 marked a turning point in financial history. Blockchain introduced a new way to handle data and transactions securely. Blockchain is a decentralized and secure way to record and verify transactions. It eliminates the need for intermediaries, reducing costs and increasing transparency. It has the potential to revolutionize everything from payments to lending, offering a more efficient and secure method of handling financial transactions. Cryptocurrencies like Bitcoin emerged as a new asset class. They represent a significant shift in how we think about money and value. They leverage blockchain technology to enable secure and transparent transactions, providing an alternative to traditional currencies. While still in their early stages, cryptocurrencies have the potential to disrupt traditional financial systems. They offer new opportunities for investment and financial inclusion. Peer-to-peer lending platforms gained popularity during this period. These platforms democratize lending by connecting borrowers directly with lenders. These platforms connect borrowers directly with lenders, bypassing traditional banks and offering more competitive rates. They offer an alternative to traditional bank loans, making it easier for individuals and small businesses to access the funds they need. This shift has empowered many to achieve their financial goals more efficiently. Hit that like button, subscribe, and stay informed.